Welcome back to the deep dive. Today we're looking at something really fundamental changing in digital finance. And it's not coming out of Silicon Valley, not Washington, D.C. either.
Yeah, this is different. We're not talking Fed now or some future digital dollar that's, stuck in committee somewhere.
Exactly. Forget the slow CBDC debates for a second. We're talking about a U.S. state jumping directly into the digital currency game. And crucially, they're doing it using a power and institutional setup that literally no other state has.
It's quite unique, yeah.
So this is big news coming out of the Northern Plains, believe it or not, North Dakota. They've announced they're launching their own state-backed stablecoin. It's called the Roughrider.
Yeah. Fitting name for North Dakota.
Right. Scheduled for a 2026 debut. And here's the other key piece. They're partnering with Fiserv, the massive fintech payments giant.
Yeah, Fiserv is a huge player. That partnership alone tells you this is serious.
Absolutely. This isn't just some local experiment. It's genuinely one of the very first state-level stablecoin projects anywhere in the U.S. And it forces everyone, investors, regulators, tech folks, to really rethink who actually controls digital money infrastructure in the states. And, maybe more importantly, how fast it can actually be rolled out.
It really shifts the conversation.
Okay, so let's unpack this properly. Our deep dive today, we've got kind of three main goals. First, we need to nail down the basics. What is the Roughrider exactly? Why does this Fiserv partnership matter so much? And how is it meant to actually compete with, the old payment system?
Like ACH and FedWire, yeah.
Second, we have to dig into that unique advantage. North Dakota has that institutional leverage. What is it? And third, we'll look at the bigger picture. What are the ripple effects for Web3 globally? And of course, the inevitable regulatory headaches on the horizon.
Right. And if we, put this whole thing in context right from the start, this move is just incredibly significant because you've got a state basically taking charge, grabbing the reins of its own digital financial future.
Mm-hmm.
They're not waiting around for the feds. Washington is just, bogged down in endless debates, bureaucracy. It moves so slowly. North Dakota's just doing it, bootstrapping their own local solution.
Kind of bypassing the whole DC logjam.
Exactly. And it's more than just like a statement about states' rights or local control. It's really a potential template for how innovation can happen. You've got a state using its existing very specific institutional setup.
That state bank we'll get into.
Right, the state bank. Using that to launch a real digital asset, not just crypto-friendly policies on paper, but actually baking it in to the core financial plumbing of the state. That really changes the game for state sovereignty in this digital age.
Okay, let's start with the fundamentals then. For you listening, when we talk about a stablecoin, especially one backed by a government entity, what's the basic promise of this Roughrider coin?
Well, the promise is pretty simple, but it's powerful. It's stability, backed directly by state authority. So, the Roughrider stablecoin, it's a digital token issued by the state, and it's designed to hold a really precise peg, 1-to-1 with the US dollar.
Meaning one Roughrider token should always be worth exactly $1 held in reserve somewhere.
Exactly. It should always be redeemable for $1 US that the state holds. That peg, that stability, is the absolute foundation for its usefulness.
And its usefulness, its function, is aimed squarely at local stuff, right? North Dakota commerce.
Yes, specifically, it's designed to be like a high-speed engine for streamlining payments within the state, handling payroll for businesses, just general commerce across North Dakota.
Okay, but here's the question I imagine some people asking.
Right.
Why go through all this trouble, all this expense, the complexity? They already have banks, right? Why not just use the existing system?
Well, the justification really comes down to two things: efficiency and local control. The big goal here is to build a modern digital backbone for North Dakota's economy that's just way, way faster and cheaper than what they have now.
Okay.
Think about how it works currently. If a state agency, say, pays a contractor, that payment probably goes over the ACH network, right? Automated clearinghouse.
Right. Which takes, 2 or 3 days to actually settle?
At least, yeah. 2-3 business days. Or maybe they use FedWire, which is faster, but it's usually more expensive, especially if it's a smaller payment.
Gotcha. So the pitch for Roughrider is ditch the waiting, ditch the higher fees, use blockchain tech for instant settlement and lower costs. Is that basically?
It's the core value proposition, yes.
Yeah.
Leverage the native advantages of blockchain, or more accurately, distributed ledger technology in this case.
Can we put some, numbers on that, or at least estimates? How much faster are we really talking, and how much cheaper could it actually be?
Well, North Dakota hasn't released the final performance specs yet, But we can look at similar enterprise blockchain solutions that are out there. The expectation is settlement finality that's near instantaneous. We're talking seconds, maybe minutes at most, not days.
Seconds versus days.
Yeah.
Okay, that's a huge difference.
It's massive, especially for local businesses. Imagine you're a small farmer in North Dakota, right? You sell your produce to a state school. Instead of waiting 3 days for the payment to clear, you get paid instantly. That dramatically improves your cash flow.
Okay, I can see that. And the cost side.
On costs, moving payments onto a DLT, even if it's a private permissioned one like this it generally cuts down on the middlemen, the processing overhead. So you could potentially see transaction costs dropping by, say, 50% or even more compared to what third-party processors or banks might charge for smaller frequent payments.
Okay, that economic argument makes sense. But we need to hit the political angle, too, because this is where people might get nervous. And here's the really crucial distinction. You called it the aha moment. This is not a CBDC, a central bank digital currency.
Absolutely. Critical distinction. Cannot stress that enough. A true CBDC would be issued and totally controlled by the Federal Reserve. That comes with all sorts of potential issues around privacy, financial surveillance, centralized federal control, things that make a lot of people uneasy.
Right.
The Roughrider, though, it's structured differently. It operates as a genuine public-private partnership. And that structure, that's what gives it, arguably, its legitimacy within the current financial system, not as a replacement for it.
So how does that partnership work exactly? Who does what?
Okay, so the state of North Dakota, they provide the legal framework, the regulations, they set the rules. They're the ones ensuring those one-to-one reserves are actually there, properly audited, held securely, likely by the state's own bank. They provide the legal backing.
The government oversight piece.
Right. But Fiserv, the private partner, they're the ones actually building and running the tech. Yeah. The blockchain infrastructure itself, the cryptographic security, handling the KYCML compliance checks, know your customer, anti-money laundering.
All the stuff needed to connect to the real financial world.
Exactly. And the payment rails that let it plug into existing point-of-sale systems that businesses already use. So this division of labor, it keeps a certain degree of, let's call it decentralization of implementation, even though the asset itself is ultimately backed and overseen centrally by the state.
Okay, that makes sense. So the goal is crystal clear then. Build a payment network that's just technologically better, faster, secure, available 24/7, and crucially, locally controlled. Designed specifically to compete head-to-head with ACH and Fedwire, at least within North Dakota.
Precisely. And what's really fascinating from a broader perspective is that this gives us a workable, scalable, state-level model for issuing digital money. It pulls the control, and importantly, the speed of implementation, away from Washington, D.C., and gives it to state governments.
Right. If North Dakota can actually pull this off without getting tangled in federal red tape.
If they can bypass that massive bureaucracy, the political gridlock, they could potentially innovate years ahead of whatever federal digital dollar eventually emerges, if it ever does.
Yeah.
And this specific model, state ownership of the reserve institution, combined with private sector tech expertise for the build-out that could absolutely be a powerful template for other states. We've seen states lead before.
Oh, yeah, Wyoming with crypto banks.
Wyoming, exactly. They led the way creating those special purpose depository institution charters, basically crypto-friendly banks. Texas carved out policies to attract Bitcoin miners. North Dakota is now trying to lead the way on state-level issuance itself. You could really see a state-level race heating up here for digital financial leadership.
Okay, so that brings us right to the core question. Why North Dakota? I mean, seriously, when you think fintech hubs, you think New York, maybe Miami now, maybe Austin, San Francisco. Why the Roughrider state?
Hey, yeah, it's not the first place that springs to mind for cutting-edge finance, is it?
Not typically, no.
But the answer lies entirely in its unique institutional setup. They have this massive strategic advantage that literally no other U.S. state has, and that is the Bank of North Dakota, the BND. It was established way back in 1919. And it is the only state-owned bank in the entire United States. This isn't just some historical quirk. It's the absolute structural bedrock for the Roughrider project.
Okay, state-owned bank. What does that actually mean in practice? How does it give them an edge?
Well, think about how state funds work elsewhere. Tax revenues, agency funds. In other states, that money sits in accounts at large. Private commercial banks, right, like Bank of America, JP Morgan Chase, whatever. Those banks then use those deposits for their own lending, subject to federal banking regulations, FDIC insurance rules, the whole 9 yards. But in North Dakota, all state deposits are held at the Bank of North Dakota by law. And because the BND is state-owned, It doesn't operate under the exact same commercial banking rules as a typical FDIC-insured bank. It functions almost like an operational arm of the state treasury itself.
Ah, I see. So that's the key legal difference. Having their own bank lets them issue and back this stablecoin directly. They don't need to go cap in hand to some big commercial bank and say, hey, can you please hold our reserves for this experimental token?
Exactly. They sidestep a huge layer of complexity and potential conflict. They don't need to negotiate complex custody agreements, deal with FDIC regulatory hoops for the reserves, pay correspondent banking fees, none of that.
Because the BND is the reserve holder. It is the clearinghouse, essentially.
Precisely. It massively simplifies the whole regulatory pathway, at least at the state level. They can guarantee with absolute state backing that every single Roughrider token is fully collateralized one-to-one with U.S. dollars or maybe short-term U.S. treasuries, held directly within their own state financial institution.
Wow. That level of direct control and transparency, a private issuer like Tether or Circle just can't match that.
They really can't. So yeah, the Roughrider branding, it taps into state pride, sure. But functionally, this is all about leveraging that unique BND structure for a broader digital innovation push. It's about modernizing the local economy using the direct institutional control they already have.
And the benefits they're hoping for flow from that control. It's not just cutting transaction costs, as we said, but also things like maybe increased financial transparency for state agencies tracking public money.
Definitely. Imagine state budgets operating on a transparent ledger. And, importantly, maybe improving financial inclusion, reaching local businesses or even residents who might feel underserved or maybe even excluded by the big national banking chains that dominate elsewhere.
Right. BND already has a mandate focused on North Dakota's needs.
Exactly. This isn't totally out of the blue for them. The BND already has experience, trying out digital banking tools, providing services to local community banks and residents. The Roughrider isn't some radical departure from their mission. It's more like the next logical step.
Yeah.
Digitizing the ecosystem they already essentially manage, just moving settlement from slow, old ledgers onto a modern DLT.
Okay, that explains the North Dakota why. Now let's talk about the partner, Fiserv. This seems to be where the project goes from being like a quirky state initiative to something with real national weight.
Absolutely. Bringing Fiserv on board lends massive, undeniable credibility. And maybe even more importantly, it brings enterprise-grade scalability. Fiserv isn't some small crypto startup. They are a pillar of traditional finance, a true payments powerhouse.
What are their stats again? Like, how big are they?
They process transactions for something like over 6 million merchants globally, and they provide core processing and payment services for around 10,000 financial institutions. Banks, credit unions, they're deeply embedded everywhere.
Okay, so their involvement signals that a major TradFi player sees state-backed stablecoins not as a weird experiment, but as potentially serious emerging financial infrastructure.
That's exactly the signal it sends. It's a huge vote of confidence from the establishment, if you will.
So let's get into the tech a bit. What exactly is Fiserv likely building here? You mentioned DLT, not blockchain necessarily. It can't be like a public open chain like Ethereum, right? Not for state government use with compliance needs.
No, almost certainly not. You're absolutely right. Given the stringent regulatory requirements, especially KYC, Know Your Customer, and AML, anti-money laundering controls, Fiserv will definitely be deploying a private permission DLT.
Meaning only approved users can participate.
Exactly. Think platforms, maybe like Hyperledger Fabric or perhaps R3 Corda. These kinds of enterprise-grade ledgers are designed specifically for these types of applications, where transaction speed needs to be high, but critically, the identity of every participant, whether it's a citizen using it, a merchant accepting it, or a state agency issuing it, has to be known, verified, and explicitly permissioned to join and transact on the network.
Right, keeps it controlled.
Fiserv provides that core ledger tech, but also the enterprise-level security around it, the compliance systems that can plug into existing financial reporting frameworks, and the custody solutions to make sure the tokens themselves are handled securely. This choice of permissioned ledger, it guarantees the kind of auditability and settlement finality a state government needs. It separates it completely from the volatility and the, let's say, pseudo-anonymity you get on public blockchains.
Okay, but wait a second. If Fiserv is building and running these rails, aren't we just swapping one set of intermediaries for another? Doesn't this reintroduce the centralization risks, maybe even transaction fees eventually that Web3 was supposed to get rid of? Is this really progress or just, putting a blockchain wrapper on efficient centralized finance?
That is the absolute core tension here, and it's a totally valid criticism from a decentralization purist standpoint. Yes, functionally, this is a centralized system ultimately overseen by the state via the BND and implemented by a large corporation, FESERV.
So what's the advancement then?
The primary advancement here isn't about achieving philosophical decentralization. It's about achieving massive gains in technological efficiency and providing absolute regulatory certainty within the state's borders. FESERV's involvement guarantees two critical things that most DeFi projects struggle with: rock-solid compliance frameworks and, crucially, seamless interoperability with the existing financial world.
Ah, the interoperability piece, making it easy to use.
Exactly. FESERV systems are built to connect. They ensure this Roughrider token can, theoretically, integrate almost instantly with global payment standards. Think Visa, MasterCard networks, the major point-of-sale POS terminals that practically every business already uses.
So a small business owner in Fargo doesn't need to figure out some weird crypto wallet.
Hopefully not.
Yeah.
Ideally, their existing payment terminal just gets an update, and suddenly it can accept Roughrider as another payment option, one that settles instantly. That kind of pragmatic, user-friendly, scalable approach, that's what makes this a potential blueprint for how other public-private stablecoin partnerships could work elsewhere. It bridges the gap.
Okay, let's zoom out now. Let's shift gears and look beyond North Dakota itself. Because here's where it gets really, really interesting for the broader crypto world. How does one state, even with a unique setup, launching its own stablecoin, how does that actually impact the, multi-trillion-dollar global crypto and Web3 market?
Well, the first, and I think arguably the most powerful immediate impact, is the sheer legitimization it brings: regulatory credibility.
No, so.
Think about it. You have a U.S. state, a sovereign entity within the U.S. system, formally adopting a stablecoin structure, backing it with its own state bank, and integrating it directly into its core financial operations. That sends an incredibly powerful, unambiguous message.
To who?
To institutional investors, to federal regulators, to other states, to the market as a whole. The message is, stablecoins are now being recognized as legitimate financial infrastructure.
Not just speculative internet money.
Exactly. They're moving beyond being seen as just these, fringe assets for crypto trading.
Sure.
This kind of formal state-level endorsement, especially one backed by the transparent reserves at the BND, it significantly chips away at the regulatory uncertainty that still hangs over purely private stablecoins like USDC or USDT.
And that could unlock, what, more institutional money?
Potentially, yeah. You have large pools of capital pension funds, endowments, conservative asset managers that basically require clear government sign-off or regulatory clarity before they'll touch anything crypto-related. A state-issued, fully reserved stablecoin might just meet that threshold for some of them.
Okay, that makes sense. And this ties directly into that other big point we touched on, the competition with a potential federal CBDC.
The elephant in the room, yeah.
If the Roughrider actually launches successfully in 2026, if it delivers on that promise of instant, cheap settlement for state business, it could genuinely beat the Federal Reserve's own digital dollar project to market. It could set a working, trusted precedent before the feds even finalize a design.
And that possibility that a state effectively gets there first with a viable digital currency that could ignite a really dynamic and potentially messy states versus federal digital currency race right here in the U.S.
How so? What would that look like?
It offers a powerful counter-narrative to the idea of a single, monolithic, centrally controlled federal CBDC issued out of D.C. states. Could start arguing, much more credibly, hey, why do we need your digital dollar, controlled by the Fed, potentially tracking everything, when we've built our own efficient, locally regulated system that works just fine for our citizens and businesses?
Creates political leverage for the states.
Huge leverage. And you should absolutely expect a significant ripple effect from this. You mentioned Wyoming, Texas, Florida. States that are already way ahead in thinking about blockchain policy, maybe attracting miners, setting up legal frameworks.
They're watching North Dakota like hawks right now.
Absolutely.
Right.
With intense scrutiny.
Right.
They have the regulatory groundwork already laid, or at least the political desire, to potentially launch their own state tokens next. Wyoming, remember, passed its Stable Token Act back in 2023. That law literally gives the state treasurer the authority to issue a state-backed, fully reserved, redeemable stablecoin.
They just haven't done it yet.
Right. North Dakota is providing the practical how-to guide, the implementation playbook that Wyoming or Texas or others might now feel emboldened to follow.
Okay, beyond the state politics and the CBDC race, let's talk about actual adoption. boots on the ground.
Mm,
If North Dakota really pushes this, maybe mandates it or strongly incentivizes using Roughrider for state payments, that creates immediate real-world use cases, right? Not just speculation.
exactly. And that's potentially huge for crypto adoption overall, even if users don't realize they're using crypto. The use cases become tangible, necessary things. Local businesses using it for instant payments between each other, or maybe for paying state taxes instantly, avoiding delays and paperwork errors.
Or running payroll. Could businesses pay employees in Roughrider?
Potentially, yeah. If the regulatory framework allows for it and employees opt in. Imagine getting paid and the funds are instantly available, fully backed, no waiting for ACH. That directly onboards potentially thousands of people, business owners, employees, ordinary citizens, onto Web3 infrastructure without them ever having to consciously decide to get into crypto.
Right, they're just using the fastest, cheapest way to pay their taxes or get paid.
It's kind of stealth adoption. You're using blockchain technology to solve a real, everyday financial friction point. And the driver isn't crypto hype. It's boring stuff like bureaucratic efficiency and saving money. But the result is wider use of the underlying tech.
And we need to remember the scale we're already at. Just to frame this, the global stablecoin market is already enormous, right?
Oh, yeah. It's massive.
Yeah.
The total supply of major stablecoins, Tether, USDT, USD Coin, USDC, even PayPal's PYUSD now, it's already blown past $150 billion globally. That number alone tells you there's gigantic existing demand and proven momentum for dollar-pegged digital assets.
So the Roughrider isn't trying to create demand out of thin air.
Not at all. It's tapping into that existing demand, but providing a localized, state-sanctioned, and perhaps perceived as safer vehicle for it, one that comes with the guarantee of institutional stability via the BND.
Okay, but like any big leap forward, especially where government and new tech collide, there have got to be hurdles, roadblocks. North Dakota's Roughrider isn't going to just magically appear in 2026 without issues. We've talked up the excitement, the efficiency. Now let's talk about the challenges. What are the big ones?
Oh, there are definitely significant challenges, both political and technical. The first big one that jumps out is regulatory overlap, or maybe regulatory conflict with the federal government.
Ugh, the federal question again. So will DC just let this happen? Will the big federal regulators think the OCC, the FDIC, maybe even the SEC just stand by while a state issues its own version of digital dollars?
That's the multi-billion-dollar question, isn't it? The potential for federal regulatory pushback is, I'd say, extremely high. It's almost guaranteed there will be friction.
Where's the friction point legally?
Well, the primary legal battleground is likely around interstate commerce and who ultimately has authority over banking and money transmission.
Oh.
Okay, the Bank of North Dakota has its unique status, maybe some exemptions from certain commercial banking rules within North Dakota.
Right.
But the instant that Roughrider token is used for a transaction that crosses state lines, even if it's just a North Dakota business paying a supplier one state over, say in Minnesota or Montana.
Which will happen constantly.
Constantly. The minute that happens, it arguably triggers federal jurisdiction under the Commerce Clause of the Constitution. The Federal Reserve, or the OCC, Office of the Comptroller of the Currency, could absolutely step in and assert that any digital asset functioning broadly as money needs to conform to national standards. Standards for reserves, for systemic risk management, for consumer protection. They could potentially try to impose federal rules that could complicate or even cripple the project.
Wow. Okay, so that sounds like a potential legal nightmare that could easily push that 2026 timeline way off track.
It absolutely could. Significant legal challenges are almost a certainty.
And what about the tech side? You mentioned the need for a permission ledger. What are the technical hurdles there? The biggest one seems to be interoperability, right? This thing can't just be a closed loop within North Dakota if it wants to be really useful.
That's exactly right. Interoperability is probably the single biggest technical challenge. That closed permission DLT that Fiserv is building, it needs a way to securely and, crucially, compliantly talk to the rest of the financial world, including the wider, wilder crypto ecosystem.
Otherwise, it's just digital state script, basically.
Very much. If the Roughrider is only accepted by state agencies and maybe some local merchants who specifically sign up, its utility is severely limited. It doesn't help that farmer pay for equipment from John Deere headquarters in Illinois, for example.
So how do you bridge that gap between the controlled state ledger and everything else?
That requires building secure, heavily audited bridges. Yeah. Ways to essentially represent the Roughrider token on other public blockchains, maybe Ethereum, maybe Solana, maybe Base, who knows? You'd need to securely wrap the Roughrider, taking a token issued on that private, KYC verified state ledger, and creating a corresponding version on a public, potentially pseudo-anonymous network.
That sounds risky. We hear about bridge hacks all the time in crypto.
It is inherently risky. It introduces significant smart contract vulnerabilities. You need incredibly rigorous auditing of those bridge contracts, constant monitoring for exploits. It's a massive ongoing technical and security challenge to do that safely and reliably.
Okay, legal battles, technical bridging risks.
Yeah.
What else? What about just people, regular folks in North Dakota actually using this thing?
Yep. You can't forget the fundamental challenge of user trust and just basic education. Even if the tech works flawlessly and legal stuff gets sorted out, the residents and businesses of North Dakota actually have to want to use it and know how to use it.
Right. North Dakota isn't exactly Silicon Valley.
Not typically, no.
Yeah.
So you'll need a significant public education campaign, teaching people, ordinary citizens, small business owners, how to safely get, store, send, and receive a stablecoin. You can't just assume everyone's digitally savvy, especially when you're talking about their money and introducing new concepts.
Yeah, if people see it as just complicated crypto stuff or worry it's risky or hard to use.
Then it doesn't matter how efficient the back end is. Institutional support won't be enough if there's no grassroots adoption. For mass use, the system needs to feel almost invisible, totally easy, and completely reliable, like using a debit card today.
Okay, one last challenge, maybe more philosophical. The centralization aspect we talked about. This is not decentralized money.
Not even close.
So you're going to get pushback from the hardcore crypto believers, right? The ones who value decentralization above all else.
Absolutely. You have to acknowledge that philosophical tension right at the heart of this. Many crypto purists, the sort of Bitcoin maximalists or DeFi proponents, they will view the Roughrider very critically because it has direct government backing, because it operates on a permissioned ledger controlled by FSRV and the state. It will inevitably get labeled a mini CBDC or maybe just GovCoin or blockchain as a service for the state.
Seen as counter to the whole point of crypto.
And from their perspective, that criticism is entirely valid. The core ethos of Bitcoin and much of Web3 is about trustless systems removing the need to trust governments or corporations. The Roughrider isn't offering trustlessness at all. It's offering transparent, state-guaranteed trust.
Trust in the Bank of North Dakota and FSRV.
Exactly. So it's solving a different problem. It's aiming for efficiency, cost savings, and state control within the existing system, not for global financial liberation from the system. That tension is just unavoidable, and the state and FSRV will need to be really clear in their messaging about what problems they are solving and which ones they aren't attempting to.
It's interesting to see how these themes play out elsewhere, too. We've seen similar dynamics, right?
We have. Look at PayPal launching their stablecoin, PYUSD. That showed how a huge established fintech can integrate a stablecoin pretty seamlessly into a system millions already use. But boom, immediately you had all the debates about centralization, who really controls the keys, censorship risk, because it's issued by a private, heavily regulated company.
Right. And then there's USDC from Circle. It's been hugely successful, widely adopted for actual real-world stuff like international salary payments, cross-border business transfers. It proves the demand the Roughrider wants to tap into.
Definitely proves the demand. But look at the intense regulatory scrutiny USDC operates under. Circle is constantly dealing with regulators, reserve audits, pressure from DC. It shows that even a well-run, well-backed private stablecoin is still very much subject to the whims and concerns of federal powers.
And even on a national level, remember the Marshall Islands, they tried to launch their own digital sovereign currency, the SOV.
Yeah, that's a fascinating case study in complexity. It showed that just having the government want to launch its own crypto doesn't make it easy. The rollout has been incredibly slow, complex, fraught with technical and political challenges. It proves that launching a sovereign digital currency is way harder than just passing the law authorizing it.
So the takeaway from all these examples seems to be integrating digital currency with big institutions, whether it's a fintech giant like PayPal or FSRV or a government entity like a state or a nation. It always introduces friction. Friction around regulation, technical scaling, and just ideological acceptance from different parts of the community.
Exactly. North Dakota has to successfully navigate all three of those friction points, the legal, the technical, and the philosophical, pretty much simultaneously if they want to hit that 2026 target.
Yeah.
It's a tall order. Hashtag tag outro.
All right, that pretty much wraps up our deep dive for today, the Roughrider Stablecoin. It's really quite something. Born from that unique setup with the Bank of North Dakota, powered by the massive tech engine of FSRV, It feels like a genuinely foundational step for state-level financial innovation here in the U.S.
It really does. It sets a precedent.
It gives us this groundbreaking model for public-private collaboration in the crypto space, and it could fundamentally change how state governments manage and move money, shifting away from those slow, clunky old rails towards something instant, transparent, settled on a ledger.
If they pull it off.
If they pull it off. It really does have the potential to push serious institutional blockchain adoption into the mainstream, maybe faster than a lot of us expected. Not through DeFi, but through government efficiency.
Strange pathway, but potentially effective.
So, look, if you found this breakdown useful, if it helped you connect the dots on state finance, digital currency, the role of fee-serve, maybe that whole regulatory chess game, if you had some of those aha moments like we did digging into it, then please do take just a second to engage with this content.
Yeah, it genuinely helps us out.
It really does. Subscribing to the channel, leaving a comment with your thoughts, hitting that notification bell, all that stuff actually helps us a ton with visibility, with the algorithms. You know how it works. And frankly, it lets us keep justifying the time to do this level of deep, detailed analysis for you each week. Your engagement really is what keeps these deep dives going.
We appreciate it. And maybe, as we think about this whole thing, connecting it back to the bigger picture, considering that potential for federal pushback we discussed, the states may be trying to assert themselves. Here's something for you to chew on after we sign off.
Okay, leave us with a final thought.
What if? What if every U.S. state decided to follow North Dakota's example? What if all 50 states launched their own state-backed, fully reserved stablecoins? Maybe all running on slightly different permission DLTs built by different partners? Would that incredibly fragmented state-by-state digital currency landscape ultimately help national blockchain adoption by fostering real competition and local use cases? Or would it actually hurt the long-term crypto market and maybe even national commerce by creating 50 different potentially incompatible digital dollars, making interstate business even more complex?
Wow. Yeah. Fragmentation versus competition.
That tension. State sovereignty versus national cohesion in the digital age. That's a huge question, and it's one that this North Dakota experiment puts right on the table for the next decade of digital finance, something to mull over.